First, let me give you a summary of the risk classifications to better guide you in choosing the right fund option for your investment. I categorize the risk classifications into very low, low, moderate, and aggressive. For time horizon, let's say we would consider short term if your time horizon is 1 to 3 years. Medium term, 4 to 7. Medium to long term, about 8 to 10 years. And long term would be above 10 years. Now, let's move on to the investment objective. Okay. So first, what does preserve capital mean? In order to explain it, let me compare to you investing in a bank versus investing in mutual funds. Okay. When you put your money in the bank, let's say you deposited 10,000 pesos today, you can be sure that after a day, after a week, after a month, after a year, or 10 years after, your 10,000 is still 10,000 with a little interest with it. Okay? So, investing in a bank, putting your money in a bank, the risk is very low. So, it means you preserve your capital if you place it in a low risk investment type like a bond, like a bank. Okay? While as in mutual funds, there is risk involved. If you invest your 10,000 today, its value will be different tomorrow. In fact, it changes every day. Okay? There are ups and downs in the value of your investment depending on the market factors that affects the investments. So let's say, for example, your investment objective is to preserve your capital, meaning you don't want to sustain losses with your investment. So it is best to put it in a type of investment with low risk like a bank or other types similar to a bank, similar to a low risk classification like a bank is, because you don't want to lose a portion of the value of your money at any given time. Okay, so that is what you mean with preserving your capital. Okay, you don't want its value to move, especially to sustain a loss. Okay, let's move on to the investment objective of preserving capital and earn some income. Okay, take note, like a bank, the interest being earned by your money is very low. Right now, a savings account would only give you 0.25% in a year. Okay? 0.25 means your money is earning, let's say you deposited 10,000. So your 10,000 will earn 25 pesos for 1 year. So in investments, there are trade-offs. If you're not willing to risk your money, then you can only expect a low return on it, and vice versa. So this is an example. You want a low risk, then you can only expect to earn 25 pesos with your 10,000 in 1 year. What if your objective is you want to preserve your capital, but you also want to earn some income in a way? Okay? You want to earn more than 20, you want your 10,000 to earn more than 25 pesos in a year. Okay, so if that's the case, meaning at this point, you're willing to risk a little more, okay, than the first objective. So that is why this is ideal for those who are willing to take a little risk, okay, or low risk. Okay, so that is what this investment objective means. Okay, you still want it to be some kind of a low risk, but something that will give you a little higher income than this previous option can provide you. Okay, so let's move on to the next. For the next investment objective, you want to earn income and grow your capital. Let's, in investments, when we refer to the word income, we usually mean it's a fixed interest, just like a loan provides. For example, you loaned money from a bank for a certain purpose. So the bank is earning a fixed interest from you. Okay, so that is what we refer usually with the word or the term income. It refers to a fixed interest, meaning your money is invested in an interest earning security like a bond fund. Now, if you remember, I mentioned in the investing in mutual funds guide that investing in bonds is like lending money. Okay. And in return, the issuing party will be paying you interest for your money. Okay. For the term of the bond. Whereas in investments, when we say capital or grow or growth, okay, we refer to your principal money, meaning the money you invested, as growing or appreciating in value, meaning it increases in value. Similar to a business owner who established a business and earn income from the business that he put up. Because when you say you grow your capital, you can achieve that if you invest your money in equities, or meaning, in other words, you are also investing in businesses. And your money will grow or appreciate if the businesses that you invested into become successful or earn return from their respective investments or capital that they put in that business venture. Okay, so meaning this investment objective, to achieve this, you would be investing in both bonds or fixed income securities and equities, where mainly you will be invested in businesses or companies. For the last investment objective, your goal is to maximize return, meaning your risk appetite is very aggressive. You are willing to take risks for your money. Okay, so in this case, the ideal fund option for you are high risk investments, which is equities. Again, we already discussed in the investing in mutual fund guide why investing in equities is considered high risk. All right. Again, so why do investing in equities would potentially provide the highest return? Because the amount of money that you can earn in doing this does not have any limit. Okay? As long as the companies you invested to are performing well, okay, and that is the main purpose of businesses, then you can expect that the money you invested in their companies would also appreciate like the businesses you invested in. Now, let me show you the relationship between the risk and the returns that types of investments could give you. Remember the general rule in investments, which is the higher the risk, the higher the potential return you can earn. Okay, so with that general rule, the very low risk fund option also gave you a low return compared to the other options. Okay, so in these returns are the best returns that this fund the fund options per risk classification has provided since the inception of the fund. Again, I took these numbers from our historical best. This is the best returns that our respective funds has earned since the fund has started. Okay, so I plan to use 1-year returns, but because of different market factors, a short-term return would not give you the right picture. Okay, so that's why I decided to use the best historical returns, because this is taken from a long-term point of view. All right. Okay, so both the low risk classifications gave the lowest returns among all the options. Okay, while the moderate risk classification funds gave also the average return among all the options. And the most aggressive fund options gave the highest, best historical return of 69%. Okay. Again, based on the long-term data, the general rule, the higher the risk, the higher return, and vice versa, prevails. Okay. Our actual returns shows just that. These are the high-risk fund options in mutual funds. The first one is the equity fund. It's considered as high risk. No? It is invested in Philippine equities, meaning the listed companies in the Philippines only. For 2021, its annual return for that year alone is 1.77%. But its 10-year return is 37.28%, meaning if you invested 100,000 in equity fund 10 years ago, it is now 137,000 pesos. Okay. The next type is index fund. Risk is also high. It is also invested in Philippine equities, but the difference between the first type is that it is invested in equities where the whole Philippine Stock Exchange investors is also invested. That is what it means by this description, that it mirrors the performance of the PSEI. So where the fund invests, where the market also invests. It's just like that. Okay, so again, the difference between these two, this equity fund, the one choosing the companies where the money will be invested are our fund managers based on their analysis. Okay, but this index fund, the companies where the money is being invested is dependent on where the market or the PSEI is also invested. So our fund managers is just copying where the market is invested, or the PSEI. Its 1-year return for 2021 is 0.07%. No, but this is a fairly new fund compared to the equity fund, so we don't have yet a 10-year return. But to give you an idea, the average returns of equity and index are almost the same. There are times where our equity fund is higher, like this, like in 2021, it earned higher than index. There are times that the index fund performs well than our equity fund. Okay, so it really depends on the situation. But if you're going to ask me which is better between the two, based from my experience and observation for since the index fund was launched, um, equity fund is higher in terms of return more frequently than the index fund. But it changes from time to time. I don't know if my observation is reliable, no? But it's not, I know it's not based on a concept or anything. It's just my opinion and observation. If you want, you can, if you're choosing equity, you can also just divide your portfolio between the two. Okay, you can invest 50% equity, 50% index. It's okay, it's possible. The last option would be the World Equity Index Feeder Fund. Now, this is a new fund. It was only launched in 2020. So the risk classification here is very high because aside from it is invested in equities as well, but global equities, meaning you are not confined in Philippines market alone. It is invested in globally. It can invest in any stocks globally. So in this fund option, you can invest in peso and we will be the one to convert it in dollars. Okay. It is considered a very high risk fund option because aside from the volatility and the risk involved in equities, you also subject yourself to foreign currency risk because the peso that you invested will be converted furthermore to other currencies or in dollars. Okay. But it's surprising to see that it performed very well last year, no, 25% for the year. And again, it's just a new fund, so we still don't have 10-year return or historical returns or performance of this fund, but it's quite promising based from its performance last year. Okay, but it's again, it's a very high risk type of fund. Okay, so if you have questions at this point, you can just message me, no, and I'll just expound on you further. Okay, thank you. Bye.